Hey guys, Steve from theturtlefollower.com here with the strategy session for Wednesday, September 3rd, 2014. I thought we'd switch it up a little bit tonight and take a quick look at our paper money account. This is the monitor tab with all our positions from paper money that we've entered. And right now you can see we have the 13 open positions that are similar to or the same as what is listed in the model portfolio. And you can see profit and loss open is $6,200, and for the percentage open has been 3.44%. You can also see at the top here the net liquidation, $105,263.54, and we are using $81,000 in margin. So again, this is one of the reasons we are not taking new trades, just because of the amount of margin we are using. Like I said, from the model portfolio, it's listed at about 70%. So, I just want to show you guys this just so you can see that this is something that I'm actually tracking. Everything is out in the open. These are trades that we're putting on. Everything here matches what's in the model portfolio. So, there's no smoke and mirrors or anything like that. These are actual trades that we've put on. And again, if you look at the order history for the last 30 days, you'll see every one of these trades here is one that we've either opened or closed. Here we closed the trade and win back on the 8th. And, the last trade we opened was on the 21st with GD. So, like I said, I just wanted to show you guys that. We'll get over now to the my personal platform where I do all the rest of the videos with the charting. All right, so here we are back in my personal platform. One other thing I want to point out to you guys that I didn't say in that last segment was you'll notice on the monitor tab I don't have a profit and loss for the day. That's just a personal preference of mine. I'd rather not see what I make or lose per day. The biggest thing for me is to know what I'm up or down for since I've entered a position. Since we are longer term traders, the day-to-day action for me doesn't really make a lot of sense to see, you're up 400 this day and down 300 the next day. I'd rather just see it consistently going up. So the 3.44% that was there and the $6,200 in open profit were both from the time we've entered the trade. So both open profit positions or indicators. So again, that's just a personal preference of mine. I still do look at the charts every day, obviously, just to see if anything has changed with our trends. But I like to not see what was gained or lost for that day. All right, so now onto the charts. The S&P 500 is really just consolidating, as we've been discussing. This is really something I was looking for. You could see here how the candle bodies are lining up, essentially in a sideways movement. They are slightly higher, but we tried to break out today, and it did not hold, and we came right back into this support range or consolidation range right in here. So I would consider that this is potentially the move that we have for the rest of the week. I think there are still people on vacation from the holiday weekend. And, next week maybe we can get a movement outside of this range. But for right now, it looks like the market is fairly content just putting in these small consolidations and small daily movements. And again, you can see that every time we've tried to move above or be below this consolidation, that we've reverted back to this area here. Our positions today, we had one, Apple, that was down significantly, down 4.3%. I think it was news with Samsung or something. But look at where we're coming right back into. We're coming right back into this support and channel. Now, if we redraw this as a channel, okay, you could see, and we get rid of this line here, you could see essentially that we did hit a top. We hit this resistance in the channel, and now we're reverting back to the lower portion of the channel, which is also coinciding with the 50-day moving average. I see nothing wrong with this. I mean, obviously, we wouldn't want to lose 4.2% in a day, but the fact is we're coming back. Hopefully we can hold these levels, and we would then be able to use this new low, or whichever low may come tomorrow, as our next stop level. Again, just because we're moving down, but we are within the channel, I think we're perfectly fine nothing concerning as of yet. That could change in a couple days, but for right now, it's just the way I look at it is it was a reason to take profit. Whatever the news was, we had a significant run, and let's see now if we can hold this 96.50 to 97.50 level, which is coinciding with that 50-day moving average. And if we do, then we can use that as a stop going forward. ADM really just slightly sideways, down 0.26%. Everything we discussed yesterday still holds true. The next stop level I'm looking at, which I'm going to highlight right now, but we're not going to move the stop to, is right here, this bottom of this gap, this $48 level. Okay, that would be my next potential stop to move. And for right now, I think this 46.38 still holds a lot of weight. And, right now, with that 50-day moving average starting to trend significantly higher, all right, it's getting a little bit steeper. I think we can, once we pass that $48 level, we would be able to move that stop up. AMT down 0.68%, really just in the middle of this range. We talked about this over the weekend and for the past few strategy sessions. I think we're consolidating in this $96.50 to $100 level. Allowing this 50-day moving average to catch up is a significant potential for us to bounce off of and then eventually push above this $100 level. So I really like the setup that we're seeing here. I like the fact that we're moving sideways and not moving down, and I like the fact that this 50-day moving average is following up to the point where it could provide some bounce in the next move higher. APD up 0.45, really just moving sideways. Okay, a lot of our stocks right now I think are just digesting some gains. We do have to watch the potential for this lower low in here. Okay, so we have to just watch for that trend line, because that may become a controlling trend line. If we can get a break above that and a break over this 134.50, then I would be very happy moving our stop to 131. Disney up 0.15%, really just in the box, moving sideways after the little bit of a pullback we had last week. We've now had a couple of nice days of upward action, and we're close to breaking out. Again, I would like to see this potentially move sideways for another couple weeks and allow this 50-day moving average to catch up, similar to what it did here, and then provide another balance point to make an assault on $100. EQR sideways, stop still 64.08, but really, there's not much to talk about with that. EXP, it tried to break out higher, and again, this is something that we've talked about. I think unless we start putting in these digestion areas where the stock is going to consolidate, then all these breakouts are going to be false. Okay, that's what happened here. Yes, it did break out at the end of the day, that we did put in higher prices. But the fact is, we closed at the lower end of the range, and anybody that's buying it, at this point, I think is a little late, and or potentially early, depending on which way you're looking at it. But my preference would be to allow this 50 days, say, come up to like 84, 85, and allow this another couple weeks of sideways action, and then have that bounce. And I think then at that point, it wouldn't be sold into like it was here. Fidelity came back in, now is bouncing higher. Right now our stop is 54.86. I think if we can get a breakout over this 57.50, where this moving average slides up a little bit more, 56.50 could potentially become our next stop. So you see how that works? I mean, I understand everybody wants to move a stop every day, but we really have to wait for these types of pullbacks to define an area, and then wait for our criteria as far as trend line and 50-day moving average and new breakouts to signify new lows, and then we can move our stops up. So as much as we don't want to see stocks pull back, it's a necessary portion and procedure that has to be followed to move our stops. So we need those pullbacks to identify those levels. GD, okay, same here. Now this one is a little bit more difficult. We wouldn't want to move our stop all the way up to 122. If you're aggressive, you could, but we need that 50-day moving average. So I think at this point, if we can start pushing higher, then just by nature of averages, the 50-day will start to round up and start to push higher. And this potentially could be our next stop level, but it won't be, for another, say, 3-4 weeks. But I think that is a significant level that once the 50-day has exceeded, that we would be able to move our stop to. But for right now, 114.50 remains the stop. H&R Block had earnings after the bell. I don't think... At one point, it was up more. Let's just check. Yeah, at one point, I think it was like in the 34 range. Right now, it's trading 33.40, 33.58. So essentially unchanged. I think at one point, it was like up 4%. But for right now, we're coming into that trend line. Our stop is still 31.97. I would like to move the stop to 32.90 would be the next level, which would be this low here. I just need to see that 50-day kind of turn up, and I need to see a breakout over 33.90. So if we can get those two things, I have no problem moving the stop to 32.90. All right. Love Southwest Air was down 1% today. After yesterday, it had a nice breakout. Today came back, tested that breakout, closed lower, but still above yesterday's breakout. So for right now, again, I think this may become one that we have to use this 29.30 as our next stop level. It's gone so far so fast. It hasn't really pulled back any to identify another decent stop level. So I think once we can get this 50-day moving average to exceed 29.30 and start trading up in here, or start indicating up in here, I don't know what the right terminology would be for that, start displaying itself over 29.30, then I think at that point we would want to move that stop to 29.30. RSG down 0.08%. Again, similar to, I think it was AMT. Yeah, similar to AMT. I think we just need some consolidation. All right, look how far extended we are from the 50-day moving average. Okay, look back in here, look what happened. I think if we can put in, again, another couple weeks of some nice tight consolidation, allow that 50-day moving average to catch up, and then potentially use it as a springboard to bounce up and above this $40 level, then we could potentially use $39 as our stop. So it's nice to always have a plan, always think about what you're going to do when certain things happen, so that when they do happen, you're not sitting there saying, oh, well, I don't know what I'm supposed to do. I don't know how I'm supposed to trade this. All right, so I always look down the line. Where is my next stop level going to be? Where can my next stop level be? Not, oh, this happened. Where should I look? I always try and predict what the stock chart may look like, and that helps me identify where a stop level should go. So like I said, this one came back and tested the 50 and the trend line. That's potentially what may be happening here. Maybe we come back and test 38. That's fine. If we do and then we bounce higher, then 38 becomes my new stop. So as much as, like I said before, as much as people don't want to see pullbacks, you always want stocks to go straight up in a line. It's very difficult to manage them when they do that. So a pullback is a big part of our system here, that we need those pullbacks to identify those levels and identify our new stops to manage our risk. And the final one, Tesoro, really just moving sideways in this consolidation. Again, look at what's happened since we started. We started this consolidation back here on 814, and look at where the 50-day moving average was. And now we're still in that same range, and the 50-day moving average is almost $3 higher than where it was. So, another 2 weeks, maybe we're going to be right here. I'd say 63 with that 50-day, and that's where our stop's going to move. So again, consolidations and pullbacks are huge with our system. They're really very important to managing our risk. As far as the weekly watch list, there was one today. Broadcom broke out. If you were going to take the trade in Broadcom, I would suggest you put your stop here at 36.70 and buy it tomorrow at the open. We are not going to be taking that trade. But again, it's a great looking setup. You're essentially breaking out two all-time highs. Okay, if you look here at the weekly, the last high was back here at 39.40. So breaking out all-time highs. Everybody in the stock is a winner. So not much selling pressure. And I think, like I said, if you can buy it tomorrow if you want to buy it tomorrow at the open, 36.60 would be your stop level. Let's take a look at a couple more. ABT is really just in the middle of the range. NVIDIA is starting to break out. CVS did break out. Okay, so another one here. CVS, if you want to take this trade, your stop would be here at 76.07. Or if you want to be a little bit looser with the stop, you could put it down here at 75.30. So a nice risk reward. And you always need, if you're taking these trades outside of what, we're talking about with the model portfolio, the biggest thing to remember is where your stops are and size your positions accordingly. When I do roll out the new website, we're going to have some e-courses that I'm excited about. So one e-course is going to go through a trade from start to finish, how I identify the trades, and how we go through and size positions, everything that I do on a daily basis for my personal portfolio, for the model portfolio, because eventually these stock or strategy session videos and weekend updates are going to be for members only. So that is another avenue we can look at with those e-courses to get some more information. JWN, really just in consolidation. Dow, and the last one we're going to look at is AIV, which did break out yesterday and continued its breakout. Again, another great looking setup. Okay, if you took it this morning, good for you. My stop is 33.11. Okay, I took it personally. I was not able to take it in the model portfolio, but I do own it personally. So I am right there with you. And you can see by this yellow arrow, that is my current stop level. All right. So that's it for tonight, guys. Thanks for watching. We'll be tomorrow morning. Tomorrow is Thursday because I'm getting my days confused. So tomorrow's actually my oldest son's first day of kindergarten, which is a little crazy. But in the morning, we will be listing the anatomy of a stock trade video in Schlumberger. So definitely check that out. And don't miss the strategy session tomorrow night. And then before you know it, it'll be Friday and the week is going to be over. So nice short week. But for right now, there's a couple more things we have to get through to the end of the week. But I think we're really just looking at some small ranges and some more consolidation into the end of the week. Guys, have a great rest of the night, and we will see you tomorrow.